Hi everyone, welcome to Little Wicket Railway. I'm Rob, and as you might be aware, I like to keep my eye on the business side of model railways, particularly the financial performance of Hornby. They've been struggling for a while now, but their management are in the middle of a 3-year plan to make the company profitable again. And I've made a couple of videos about this already, and I wasn't planning on making another one until their annual results were available later this year, except that earlier this week we received some interesting news that I thought was worth reporting on. Hornby PLC have been listed on the alternative investment market, commonly known as AIM, and AIM is a sub-market of the London Stock Exchange designed for smaller companies, which allows them to access investment but with a more flexible regulatory framework. Well, earlier this week, Hornby announced that they were going to delist and leave AIM and go back to being a private limited company. So essentially, they no longer want to trade their shares publicly. Their reasons for doing this are set out in a document that was published on Thursday, and it read,
"Over recent years, Hornby has committed to implementing significant structural change and driving operational transformation for the benefit of all stakeholders in Hornby, not least its loyal shareholder base. This commitment has been evidenced by the board's strategic actions, including acquisitions, divestments, and operational restructuring. This has been most recently evidenced by the acquisition of a stake in Warlord Games, the acquisition of Corgi Model Club, the sale of LCD Enterprises, the headcount and restructuring in 2024, and the relocation of the company's logistics operations to the Midlands. The board anticipates that for this process of structural change to continue at pace and to maximum effect, operating outside a publicly quoted environment would improve its decision-making agility and regulatory hurdles during a period of demanding agility and focused execution. At the same time, the board is conscious of the limited liquidity of the company's shares on AIM, balanced against the regulatory burden and costs of maintaining the public quotation. Therefore, following an ongoing and in-depth evaluation, the board has concluded that it's in the best interest of the company and its shareholders to seek shareholder approval for the cancellation and re-registration."
There's a meeting on the 1st of April for all the shareholders to look at the proposed changes, but the majority shareholders have already basically said that they're going to vote everything through, and those changes will take place in April, so very fast-paced indeed. And there are various options for existing shareholders. You can remain a shareholder when it changes from a PLC to a limited company. You can sell before or after the change, or they can swap their Hornby shares for shares in Castleknow Holdings, which is one of the firms that currently invests in Hornby. But it's worth noting that since the announcement, the share price has dropped significantly. It reached an all-time low of 6.6 pence per share when the announcement was first made, and currently it's hovering at just over half of what it was before the announcement. So selling might not be very appealing at the moment. Personally, I think it makes total sense for Hornby to delist from AIM. It wasn't working for them in terms of attracting investment from the market, and as a private company, they've still got the backing of some pretty big investors such as Mike Ashley. Decision making should be quicker, which is important when you're trying to rapidly turn around the business, and they won't have all the regulatory burden that being listed entails. They actually estimated that it's costing them around £400,000 a year in regulatory costs to be listed, so that's an immediate saving that will have a dramatic impact on the business. Unfortunately, it means that people like myself won't have as much insight into the business's performance, as they won't be required to disclose quite as much information to the market as they currently do. And when it comes to delisting from AIM, they're not alone. The exchange has been losing around one company a week for the last few years and is dramatically reduced in size compared to the mid-2000s. So them leaving isn't really major news. So yeah, in my opinion, it's a sound business decision. In terms of trading performance, we did get a very brief glimpse into how things are going from this statement.
The company remains on track for year-on-year sales growth despite weaker trading in January and February. Temporary shipping delays have also impacted the company's operations, which the company expects will ease in the coming months. Despite these short-term challenges, the company continues to make progress with multiple change initiatives aimed at improving business performance. Encouragingly, the new product ranges launched at the beginning of the first financial quarter have been well received, with associated orders up 22% year-on-year, highlighting strong demand and positive customer engagement with the company's brands.
So it sounds like trading is still tough, but it's good to hear that the new products are being well received. I thought their railways offering this year was the best it's been for ages, particularly the railroad range of products. Apologies if I've given this video a clickbaity title. I'm still undecided, but it might be something like the end of Hornby PLC, but technically that's true. Just maybe I should have put in brackets and the beginning of Hornby Limited. As usual, let me know your thoughts in the comments. I really enjoy reading them. Thanks to all the YouTube members and patrons for your support, it's very much appreciated. And if you've enjoyed this video, then please give it a like and subscribe to the channel. I promise you it's not all financial news. Thanks for watching, and I will hopefully see you again soon.